Hey financial dummies! Today we're diving deep into the world of banks. Are they our trusty financial companions, or something more complex? We'll crack open the system, explore how loans work, and even unveil the truth behind money being printed out of thin air. Buckle up, because things might get a little less black and white than you think. Banks, friend or foe? The answer: it's complicated. Banks are businesses driven by profit. They offer services like safekeeping your money, providing loans, and processing payments. These services are valuable, but banks make money by charging interest on loans and fees on accounts. So while they can be a helpful tool, their interests don't always perfectly align with yours. Think of it like this. A bank is like a financial gym. They provide the equipment, accounts, loans, and expertise, financial products, security, to help you reach your goals. But you're the one putting in the work, managing your money, making payments. It's up to you to use the bank effectively to achieve your financial fitness. The banking system, a balancing act. Imagine a giant pool of money. This pool represents all the deposits people make in banks, your savings, checking accounts, etc. Banks don't just keep this money under a mattress. They lend it out as loans. This is where the magic, or maybe mystery, happens. Here's the gist. You need a loan for a house. More on that later. The bank uses a portion of its deposit pool to create your loan. This creates new money in the form of credit. Now you owe the bank back the loan amount with interest. As you repay, money flows back into the deposit pool. Is money printed out of thin air? Not exactly. Banks don't physically print money, but they do create new credit, which acts similarly to cash. It's important to note that banks are regulated and can't just lend out any amount they want. They need to maintain a certain reserve ratio, a percentage of deposits they keep on hand to cover withdrawals. So we've debunked the printed money myth. Loans are essentially borrowing from the bank's pool of deposits, with interest as the fee. There are many types of loans, but let's focus on two common ones. Personal loans. These are for various purposes, like car repairs or debt consolidation. They are typically unsecured, meaning you don't put up any collateral, like a house, if you default. Auto loans. These are specifically for buying a car. You use the car itself as collateral, and interest rates are usually lower than personal loans. Understanding mortgages. The key to your dream home. Understanding mortgages is crucial for anyone aspiring to own their dream home. A mortgage is a specialized loan used specifically for purchasing property. The terms can seem daunting, but here's a simplified breakdown. The loan amount. This is the principal sum you borrow from the bank, which typically covers the majority of the house's price. The down payment. This is the initial payment you make up front, usually around 20% of the purchase price. A larger down payment can reduce your loan amount and monthly payments. The interest rate. This is the cost of borrowing, expressed as a percentage of the loan amount. It significantly influences your monthly payments and the total cost of the loan over its lifespan. Lower interest rates are favorable as they reduce your overall expenditure. The term. This is the duration over which you repay the loan, commonly set at 15 or 30 years. Shorter terms generally mean higher monthly payments but less interest paid overall. Mortgages are a substantial financial commitment and require careful planning. Ensure that you can manage the monthly payments comfortably within your budget. By understanding these key components, you can navigate the mortgage process more effectively and move closer to owning your dream home. Understanding mortgages is crucial because they involve significant debt. Do your research, compare rates, and ensure you can comfortably afford the repayments. Financial dummies, that's the lowdown on banks, loans, and the not quite printed out of thin air money magic. Remember, banks are a tool, and like any tool, they can be beneficial if used wisely. In the next video, we'll explore different types of bank accounts and how to choose the right one for you. Until then, stay financially informed, and don't be afraid to ask questions. We're all dummies here, learning together.